Now we also need to understand profit and loss statement from the perspective of value creation, performance evaluation, risk management, decision making, and strategy formulation. As I was saying little while ago, we are company secretaries, we are the KMPs in case we are in the employment, or in case we are practicing as a company secretary. Please remember, in that case also, we need to advise our clients as to how should they manage their finance so that they are able to create more value, so that they are able to evaluate their performance, so that they are able to do the risk management of their businesses, so that they are able to also formulate a strategy for their business. Now, how do we look at the profitability statement for this purpose? Now, this is what I am going to give you a different perspective altogether as far as the profitability is concerned. Please remember, we as company secretaries not only have to understand the profitability from the perspective of financial reporting, but we also need to understand the profitability from the perspective of decision making. Now, from the purpose of decision making, profit can be understood in many ways. So, how the profit can be understood? First of all, it can be understood as gross profit. Then we need to be aware of something which is known as COGS, cost of goods sold. Then you have a cost which is known as SG&A, selling general and administrative expenses. So both these costs put together, that means COGS and SG&A put together, it becomes EBITDA cost. It becomes the EBITDA cost. And remember, friends, and I'm going to discuss with you, EBITDA is one number which is so very crucial all over the world. All over the world, without any doubt, every business man is interested in one number, and that one number is EBITDA. So if you are interested in EBITDA, then you also got to be interested in the EBITDA cost. So and what is the EBITDA cost? For the time being, just understand COGS and the SG&A put together is your EBITDA cost. So when you deduct your EBITDA cost from your gross profit, when you deduct your EBITDA, when you deduct your SG&A from your gross profit, what you get is known as EBITDA. EBITDA is earning before interest, tax, depreciation, and amortization. Please remember, this EBITDA is crucial for each and every business. To share it with you, I was with a group called ArcelorMittal, and I was with them for 6 years. And in those 6 years, what I noticed that Mr. Mittal, who is the chairman of the entire group, every quarter he would write a mail to all the senior executives of the company, of the group. And I have noticed that every time Mr. Mittal would highlight three things, and those three things will be: number one is the health and safety, number two would be the EBITDA, and number three is reduction of the debt. So you can understand, the chairman of a Fortune 500 company, $100 billion company, a company which is the largest steel and mining company of the world, if he is writing in his mail in the second point EBITDA, you can understand the importance of the EBITDA. And as the KMP, as the company secretary, as the practicing company secretaries, we need to understand as to what this EBITDA is, what is the relationship of EBITDA with the company's life. You can virtually take it that EBITDA is lifeline of a business. EBITDA is like a lifeline of a business. EBITDA is also linked with the borrowing capacity of a business. And EBITDA is also linked with the valuation of a business. So this is the significance of EBITDA, and we will understand as to how do we arrive at the figure of EBITDA. Then we need to know what is EBIT, and then of course we also need to understand EBT and EI, and I discussed with you a little while ago, that is earning before tax and extraordinary item. Then of course we discuss extraordinary item, EBT, EAT, and so on and so forth. Now let us focus and understand all these terms with the help of an example. So here it is. So how do we understand all these terms? So first of all, what I have in front of me, so all of us, whenever we need to look at the financial statements of any business, and we look at the P&L, the first thing that we come across is your sales. And please remember, this sales is also referred as top line. It is also referred as top line, and I'm sure a question may come to your mind as to why it is referred as top line. No rocket science. It is referred as a top line because this number sales is appearing in the top of the P&L statement, and that is why sales is also referred as top line. So whether you say sales or you in the general parlance, people will talk as to how is the top line of a business. So when somebody is saying how is the top line of a business, what basically he is referring is how is the sales of the business. Now, from the sales, what we do, we deduct the first cost that we incur in the business. And friends, what is the first cost that we incur in the business? The first cost that we incur in the business is the material cost, isn't it? So if I am a manufacturing company, if I am a Hero Honda, or I am Honda, or I am Hero, or I am Bajaj, or I am Maruti, or I am Tata Steel, or I am Tata Motors, any manufacturing company, the first cost that it would incur is the material cost. So what we need to do from the figure of sales, we need to deduct the material cost. Please remember, then we also need to deduct the second cost. And what is the second cost that we incur in the business? And I'm sure all of you would very easily be able to say, and that second cost that we incur in the business, it is known as manufacturing expenses. And as I said earlier, remember, manufacturing cost is also referred as conversion cost. And why it is also referred as conversion cost? No rocket science. Manufacturing expenses are also referred as conversion cost because this is the cost that you incur for converting your raw material into the finished product, and that is why it is known as conversion cost. Please also remember the manufacturing expenses and the raw material cost together. This is known as COGS. So what is cost of goods sold? Cost of goods sold is nothing but total of the raw material cost and the manufacturing expenses put together. So from the sales, when you deduct the material cost and the manufacturing expenses, what you get in your hand is known as gross profit. And I'm sure you will very easily be able to understand. In other words, what I'm saying when I deduct my COGS from my sales, what I get in my hand is gross profit. Now please remember, this gross profit in general parlance is known by many names. So some people call it as gross margin, some people call it as gross profit margin, some people call it as gross contribution, some people call it as gross value addition, some people call it simply value addition. They all mean the same thing. They all mean the same thing. So that is what we need to be aware and we need to understand as far as the gross profit is concerned. Now from the gross profit, what you will do, you will deduct your SG&A, selling, general and administrative expenses. As I was telling you earlier, the selling, general and administrative expenses would comprise of what? It would comprise of all the expenses other than your manufacturing cost, other than your material cost, all the other expenses will be part of your SG&A, selling, general and administrative expenses. So it would include distribution cost, marketing cost, promotion cost, administration cost and everything. So now from the gross profit, what do we do? From the gross profit, we deduct the SG&A, and when we deduct the SG&A, what we get is something which is known as EBITDA. EBITDA, as I said, is earning before interest, tax, depreciation and amortization. Please also remember, EBITDA is also known by another name, and that another name is COP. And what is COP? COP is cash operating profit. Cash operating profit. So you call it EBITDA or you call it cash operating profit, both mean the same thing. Now the question can come to your mind as to why EBITDA is known as cash operating profit. No rocket science again, friends. How much cash did you get in your business from the sales? 3,000. And out of this 3,000, how much is gone out from the business on account of the material cost and the manufacturing expenses? And that is 1,500. How much is gone on account of the SG&A? 250. So how much cash is remaining in your hand from your operations? It is 850. So why EBITDA is known as cash operating profit? And that is because this is the amount of cash which is available in your hand or going to be available in your hand from your operations, and that is why EBITDA is also known as cash operating profit. From the EBITDA, you deduct the depreciation and you deduct the amortization. We have discussed already what is depreciation, what is amortization. So from the EBITDA, when we deduct the depreciation and the amortization, what we get in our hand is known as EBIT. EBIT, please remember, is also known as operating profit. EBIT is also known as operating profit. Now at this point in time, friends, let me tell you, because sometimes now I'm told saying EBT, PBT, EBIT. Uh, Now remember, whether you call it EBIT or PBIT or IBIT, all mean the same thing. And why all mean the same thing? That is because in India we call it PBIT, in Europe they call it EBIT, and in America they call it IBIT, income before interest and tax. So ultimately they all mean the same thing. It is just the expressions are different in different geographies, and that is what we should remember. From the operating profit or from the EBIT, we deduct the finance cost, which I am sure you would remember. Finance cost, interest cost, borrowing cost, finance charges all mean the same thing. And when you deduct the EBIT from your operating, when you deduct the interest from your EBIT, what you get in your hand, it is known as EBT, earning before tax. So you can call it EBT or you can call it PBT. PBT both mean the same thing. It is from the EBT you will deduct your taxes, and remember at this point in time, friends, you don't pay tax on EBT. The amount of tax has to be separately computed as per the provisions of the Income Tax Act. So ऐसा नहीं, it's not that the income tax, it's not that the income tax rate is 20%, and therefore you charge 20% of your EBT as tax. No. For the purpose of tax liability is computed separately as per the provisions of the Income Tax Act, because the depreciation methods are different, the rates of depreciation are different. Plus, as I said in the beginning, there are timing differences, there are permanent differences. So all those will need to be taken into account while computing your tax liability, and while taking your tax liability. Hello? Hello?
Yes, sir, please.
Okay. Am I audible?
Properly audible, sir.
Okay, no, there was a call coming, so I was just wondering. Okay, good. Thank you so much. Thank you, Atul. So now you will deduct your taxes from your EBT, and what you get is your EAT. EAT is earning after tax. Now remember, you call it EAT, you call it PAT, you call it IAT, you call it net income, you call it net profit, you call it by whatever name, they all mean the same thing. This is also known as bottom line. And why it is known as bottom line? So profit after tax, remember, is also referred as bottom line. And why it is also referred as bottom line? Because you can see that in the P&L statement, the EAT is coming in the bottom of the P&L statement, and that is why it is also known as bottom line. So meaning what? Meaning when someone is saying as to how is the bottom line of Tata Motors, or how is the bottom line of Bajaj Auto, or how is the bottom line of XYZ company, what is he referring is how is the profit after tax of that company. Now from the amount of profit after tax or earning after tax, when you deduct the dividend, what you get in your hand, it is known as retained earnings or retained profits. And please remember, no rocket science again. Why it is known as retained earning or retained profit? And that is because company earned a profit after tax of 150 rupees, and out of the 150, company gave dividend to the shareholders of 50 rupees. So how much is the profit that the company has retained in the business? And that is 100 rupees. And that is why this 100 rupees of the profit is known as retained profit, or it is also known as retained earning. Now this profit, friends, goes and sits in the balance sheet as reserves and surplus on the side of the liabilities. And then there is something which is known as cash accrual or internal accrual. How do we understand cash accrual or internal accrual? Which is nothing but total of earning after tax plus the depreciation and amortization. What is internal accrual or cash accrual? What does it mean? It basically means how much cash has accrued from the business at the end of the year. So that is your cash accrual or internal accrual or in cash earnings. So I'm sure you would remember, EAT is the cash, the profit that you have earned. So that profit is going to be with you. This depreciation and amortization, as we had discussed earlier, it is a non-cash expense. even though we deduct the depreciation and amortization while calculating our EAT, earning after tax, but this amount is not given to anyone. Since this amount is not given to anyone outside, this amount remains with us. And that means our internal accrual or cash accrual or internal accruals, they would comprise of these two components, earning after tax and depreciation and amortization. So this is how, friends, we understand the profitability from the perspective of decision making, value creation, risk management, performance evaluation, so on and so forth. Interestingly, in a lighter vein, I would always say EAT has got one more meaning. EAT has got one more meaning. And what is that one more meaning is? That one more meaning is EAT stands for EAT. And EAT would mean only this figure of EAT in your company is positive, then only you can eat in your business and not otherwise. So basically meaning thereby in business we have to make profit. Making profit in business is non-negotiable. It's not a matter of choice. It's not a matter of decision. It's not a matter of an option. If we are in business, we have to make profit and we have to create value. So this is how, friends, we will understand profitability from the perspective of decision making, from the perspective of risk management, so on and so forth.